Hello, everyone. This is Dan Gramza, and welcome to dangramza.com Market Studies for Monday, June 8th. Well, before we get started, what you're looking at is a daily chart in candle format, in case you haven't seen these videos before. The green line represents buy, the red line represents sell. The dashed lines means that's something that happened earlier in the week. And if you go to dangramza.com, you can look at the videos back over 10 years. And you would see, if you go day by day, how these markets unfold and how these lines that you see are moved, just to give you a feel for how this is created. Now, let's talk about what's going on. In fact, I got to tell you, we should be talking a little bit about the fundamentals. The job growth in the United States was way beyond expectations, and the current unemployment rate stayed steady at 4.3%. So that's all good. It's good information. Why is the stock market down? And my thought is because of interest rates in the Fed. So the market's saying it's always anticipating the future. The market is thinking, well, maybe the Fed is not going to lower interest rates, which is what the market wants, but actually may increase interest rates. Labor is very strong. Inflation may be going up a bit. They want to calm that down. And with labor the way it is, they have some wiggle room to do that. So the idea that they're going to lower interest rates before the end of the year is now diminishing. And we're seeing a market moving on what I call an anticipation trade. No, the Fed hasn't done anything yet, right? But it's the possibility, and that's what we're seeing here, I believe. Anticipation trades create large movements, but typically not a trend change. And just to give you a feel for what these lines represent, if you're not familiar with futures, the difference between the buy and sell level in that market is $1,575. When we look at the NASDAQ, it's in the very same boat. Behavior-wise, it's looking just like what we saw in the S&P. This difference here between the buy and sell level is $2,350 a contract. Further movement down, I'm not looking for a big day down here in the NASDAQ. And when we look at the Dow, see a lot of lines there. So there's been some action in that market. Again, you can go back to dangramza.com and see how these lines changed. But just to give you a feel for what is happening here, the dollar difference in that market is $590 a contract right here between that buy and sell level. And further movement down, this is bearish. It does imply follow through, but I'm not looking for a big day down. Even in the Russell, the dollar difference buy to sell level in that market was a fairly big move. That was $6,000 a contract. Further movement down, I'm looking for an inside day. So we have a lot of uncertainty out there. That's what this is showing us. And it's reflected also in the US dollar. Capital flows towards the US dollar. And that is what we're seeing here in our friend, Mr. Euro. The dollar difference buy to sell level here, $275 a contract. Further movement down, yes, but a big move down, I'm not looking for that. The market's going to try to reassess what's going on. So that's why I don't expect that. Over in the Swissy, dollar difference sell to buy level in that market, again, just as a reference, is, let me get that for you. It's $900 a contract. Further movement down, it's in the same boat. Could be an equal and opposite. Check this one out. This is the yen. Mr. Yen is so cheap. This is where central bank have intervened before. So it's a very interesting market in terms of its behavior. It is slowing down, but so far we haven't seen consistent buying there. But the Aussie dollar did fall out of bed. And in this market, the dollar difference here between the buy and sell levels right up here, that's $200 a contract. And in the British pound, let's get that up here. Here we go. The British pound, that market also softer. As you can see here, it broke to the downside. Dollar difference buy to sell level in that market was $31.25. Further movement down, well, it's what we would expect. Remember, it's at a level that we found buyers before. Look at the Canadian dollar, our friends up north, the loonie. What we can see here in this market is a lot of volatility. And the dollar difference that sell down to that buy level, just to give you a feel for that, is what is that? It is $1,170 a contract. Let's move on though, and let's take a look at what's happening with Bitcoin. Do you think it's up? No, it still continues lower, and I look for that to continue. It's got a lot of room to the downside. 10-year notes weakness as yields have gone up. Uncertainty causes that, and that's what the market's feeling right now. And look at bonds. Bonds, we have the same thing. 30-year bonds yields have gone up, and we're seeing prices soften in that market. So not unusual behavior. Dollar difference here is $125 a contract. And in gold, you would think if there's so much uncertainty, shouldn't gold be going up? Well, actually, remember, it's a yield play. And we saw yields going up on the 10-year note, bond prices going down. That makes sense. This is reasonable in terms of what we're seeing here. But let's talk about these two lines here. That's $2,300 a contract. Silver, also very similar behavior that you saw there. The dollar difference between these two lines is $6,250 a contract. Copper, this is a market that's got bullish fundamentals, but boy, these buyers are just not showing up in this market. So what's happening there? Well, the dollar difference here is $6,000 a contract. And again, I don't look for a big move down. And actually, we may have an up move in that market. When it comes to crude oil, a lot of uncertainty is swirling around that market. And it's not surprising to see this kind of behavior. It's got a potential for a long-term top, as I talked about in the advanced video, but the dollar difference here between the buy and sell level is $1,470 a contract. Nat gas, high enough for an equal and opposite. This could be a long-term double top. And the dollar difference buy to sell level in that market is $2,700 a contract. This is bearish, but I don't look for follow through to the downside in a dramatic way. Soybeans, things are looking good for our crops. Soybean continue lower, and I expect that to continue also to a sideways to lower market. The dollar difference up here, just to give you a feel, is $250 a contract. Now check out corn. It's also in the same boat. Continued lower prices, and that's what we're looking for. Check out wheat in the same boat, isn't it? But here it traded one tick above that high. So that means that would have been a buy level, and it failed as it closed underwater. The dollar difference sell to buy level in that market is $3,550 a contract. Well, those are my thoughts for today. Thank you for joining me. Look forward to being with you again. And as always, take care.